Did you know that it's possible to have tenants pay the bond on your primary residence, not your investment property, the home you live in? Buying your first property can be an expensive undertaking, and as it continues to become less affordable, first-time home buyers are having to find new and creative ways to own a home without breaking the bank. Enter house hacking, an investment strategy which allows you to earn income from your primary residence whilst opening the door for creative financing techniques and significant tax benefits. And this all means that you dramatically reduce the cost of home ownership. But new property investors aren't the only beneficiaries. House hacking is a powerful way for existing homeowners to earn extra income, transforming your family property into a money-making machine. But how exactly does it work?
The idea behind house hacking is to create a second living space from your primary residence, and where possible, one which is separate from your own living area. This could mean converting a garage or storeroom into a second dwelling, dividing a house in two, buying a home with an existing granny flat, or even setting up a park home or cabin on the property. And some investors even use more than one of these strategies concurrently on the same property. Of course, it's possible to take the idea further and rent out rooms in your existing home, but the true spirit of house hacking is to create multiple separate rental units on the property in a way that respects the privacy and lifestyle of all involved.
So what are some of the benefits of house hacking for first-time home buyers? Well, obviously it decreases the cost of home ownership, as we've already said, allowing you to get a foot into the property market sooner. But it also gives new owners the ability to buy a slightly more expensive property in some cases, provided you can qualify for the bond. And this means you can potentially enjoy a better lifestyle as a result. A family member of mine did just that a few years back. They desperately wanted to buy a house with a yard so they weren't cooped up in an apartment. They wanted an area to entertain, have animals, and give their kids plenty of space to play. But despite earning some decent salaries, big enough to qualify for a bond on such a property, they just did not have the disposable income each month to pay for the running costs. But instead of giving up and settling for an apartment, they decided to look for a house with a flat to help cover the running costs. And after a few months, they found the perfect property in a good area with not one, but two separate flats on the property. And as a bonus, the house was laid out in such a way that they could easily convert one side of it into a third flatlet, which they did. With minimal capital outlay, they managed to generate 15,000 Rand per month in rental income from the 3 units in a way that didn't overcrowd the property and still guaranteed some privacy for everyone. The rental income more than covered the monthly running costs on the property, including rates, water and electricity, and maintenance. It even covered a portion of their bond installment each month, and as a result, they were able to achieve the lifestyle that they were after. Pretty incredible.
Now here's a pro tip. Most banks offer significantly better financing terms when financing a property as your personal residence or home, as compared to an investment property. Home buyers generally get benefits like 100% bond finance in many cases, and thus no deposit requirements, lower interest rates, and sometimes even the ability to finance transfer costs. So a great way to own your first investment property on the best finance terms is to buy a house to live in and employ the house hacking strategy. Even though the property has a dual purpose from your perspective, in the bank's eyes it's seen to be your family home, and you'll get the best possible finance offer as a result.
Now, what about if you already own a property? What are some of the major benefits of house hacking over traditional property investing? Well, the first is that the barrier to entry is much lower. You don't need to take on the financial commitment of a second property or outlay deposits and transfer costs, and as a result, you can generally get your investment up and running sooner and more cheaply. The second major benefit is that house hacking an existing property is almost always more profitable than buying a new property. You can generally get a much higher rental return, resulting in a far shorter payback period on your capital. Let's take a look at a case study of one of the first house hacks we did a few years ago.
One of our properties had an outbuilding with 2 rooms and a small outside toilet. Since the rooms were just used for storage at the time, we saw the opportunity to convert them into a small, self-contained flat and earn some good rental income. We calculated that we'd be able to keep the renovation costs down to around 45,000 Rand if we did some of the work ourselves. And we allowed a further 10,000 Rand to furnish the flat, which would allow us to rent out the unit for a little more each month. The total capital that we'd require for the project was therefore 55,000 Rand. After around 2 months of dedicated work, we were done. We ended up going a little over budget with a total project costing 64,000 Rand. But we were very pleased with the end result, and we knew that we would recover our money quickly. So let's take a look at the expected investment return on our house hacking project. We had done some market research, so we knew our expected monthly rent was in the region of 4,500 Rand. This included water and electricity, so factoring in a cost of around 300 Rand per month for that at the time, we estimated a net monthly rent of 4,200 Rand. This meant that we would have a payback period of only 15 months. In other words, we would completely recover our capital in just 15 months, and thereafter we'd be earning 4,200 Rand profit each and every month.
To put this in perspective and show you just how incredible this return was, on one of our other properties at the time, we were earning around 4,000 Rand net rental. This property was valued at just over 600,000 Rand, meaning we were getting a net return before the bond installment of 8% each year. Whereas with this house hacking project, we were earning a return of almost 80%, nearly 10 times a traditional property investment. And it would be completely cash flow positive after just 15 months. Pretty incredible. As you can see, if you have a suitable existing property that you can get creative with, you can earn some seriously good money.
Now, there are a couple of important things to bear in mind. First, depending on how your property is structured, you may sacrifice some privacy in certain cases, since you'll be sharing a property with your tenants. However, the popular channel Big Pond Property show how they achieve a high level of separation and privacy with house hacking. In this video, they have 2 additional flats on their property, but they ensure they attract a classier tenant by charging higher rentals and refurbishing the unit with high-end finishes. They achieve privacy by designing their flats to have separate entrances fenced off from their main home, so family and friends aren't even aware that they have tenants on their property. Second, you'll need to take your landlord duties seriously. It's even more important than normal to screen tenants carefully, since they are now sharing a property with you. And third, always be sure to check your local municipal bylaws and zoning rules before you undertake a project like this. But on the plus side, having more people on the property can help to increase security. And another great perk of house hacking is that your property value will in most cases increase. You will also learn some really valuable property investment skills such as experience with renovating and tenant management, and this will carry forward to future property investments.
If you're still not convinced that house hacking is an incredible investment strategy, here's one more reason to help persuade you. Because you've turned a part of your home into an investment business, you get to claim all associated expenses against your tax bill. And in some cases, this can reduce your tax liability to SARS and actually result in refunds being due to you. As an example, let's say you convert 1/3 of your existing home into a flat and rent it out. This would mean that you're entitled to claim 1/3 of all property expenses, including interest on your bond repayment, bank charges, rates, repairs and maintenance, water, electricity, cleaning, gardener fees, security costs, Wi-Fi, solar installation costs, and more. A normal homeowner cannot claim any of these normal monthly living expenses for tax purposes, but investors engaged in house hacking absolutely can. Remember, however, that you'll need to declare your rental income to SARS, but if you plan carefully, your expenses could more than offset this, meaning that SARS could be liable to pay you a refund each year.
So we hope that we've opened your eyes to the incredible benefits of house hacking. Property really is just such a versatile asset class. There are so many different ways to invest and make money. If you have the time and want the ability to earn more than you are getting with long-term rentals, why not try house hacking combined with Airbnb to maximize your income earning potential? If you really don't want tenants on your family property, why not apply the house hacking principles to a separate investment property to really amp up your investment return? Or if you only own a small apartment, why not consider listing it on Airbnb for a few weekends a year as a start and invest the profits? Sometimes we have to get creative to get ahead. And speaking about creativity, why not check out how we earned a positive cash flow from day one with student accommodation? Thanks for watching and see you there.